Bangla Bane Nyara. This was an old song sung by K.L. Sehgal way back in the 1930s. This song is about a dream of owning a house, or in that case, a bungalow. But ever since those old times to even till now, not much has changed. Buying your own house is still a big dream, whether it's in a big city or a small town, a big house or small. Most of us desire to live in a place which we can call home. But do you know, buying your dream house is now getting more expensive. If you are a new home buyer, saving for a house, or even if your home loan EMIs have already started, this video is important for you. As you will understand how your EMIs work and why right now owning your dream house is getting more expensive. The first thing you must be aware of is that there are two types of home loan interest rates. One is a fixed interest home loan and second one is a floating interest home loan. Now, fixed interest, as the name suggests, is fixed or stable. It won't matter how the economy or the bank performs, your interest rate will remain fixed for the duration of the entire loan or the lock-in period. However, as the rate is constant, the bank will charge a higher interest rate, which could be 2 or 3% more than the floating rate. Moreover, some banks levy a hefty prepayment penalty and loan transfer fee on fixed interest home loans. A small word of advice: if your monthly EMI is over 30% of your monthly income, then you should opt for a fixed interest rate. Why? Because any fluctuation in EMIs can badly affect your monthly expenses. Now, moving on to the second interest rate type, which is a floating interest home loan. To understand this, let's get a bit technical. The floating rate is calculated as the external benchmark rate plus credit risk premium. Now, the credit risk premium is the additional percentage the bank will charge as a risk premium, while the external benchmark rate in India is most often taken as the repo rate. The repo rate, in simple words, is the rate of interest at which the banks borrow money from the RBI or the Reserve Bank of India. So any change in this repo rate will hugely impact your EMIs. And do you know, over the years, this repo rate has fluctuated immensely. For example, if we plot repo rates over the past 2 decades, that's 20 years, as you can see in this chart, in 2004, repo rate was 6%, and in just 4 years, it increased by 300 basis points to 9% in 2008. And just 1 year later, the same repo rate fell by 425 basis points and reached 4.75% as on 21st April of 2009. Now, coming back to the recent times, since 2020, the repo rates were stable at 4%, which was a good news for home buyers. But since May 2022, because of rising inflationary pressures, there has been a considerable upswing in repo rates. And till now, the rates have increased by 190 basis points in just a matter of 5 months. So what does this rise mean for your home loan? To explain it, let's take an example. Suppose you took a 30 lakh rupees floating rate home loan for 20 years and your first EMI started in April 2022. That time, your interest rate was, let's say, 6.7%, which would mean the repo rate, which was at 4%, plus a risk premium of 270 basis points. But since then, due to the change in repo rates, the interest rate of the home loan would change from initially 6.7% to now reaching 8.6% in just a few months. Similarly, the first EMI, which was around 22,700 rupees per month, would now have increased to 26,200 rupees, which is a mammoth rise of 3,000 rupees in just a few months. Moreover, when rates go up, some banks also increase the tenure of loans to keep EMIs constant. So suppose your EMI has not changed, then there is a good possibility that the loan duration might have increased. So now a 20-year loan might have become a 21 or a 22-year loan. But you must also know that this extension of tenure is not possible beyond the working years of the borrower, while banks also have an upper duration limit of 20 or 25 years. Therefore, next time you plan to buy a residential property, do keep in mind how fluctuating economic factors can impact your EMIs and why it is important to understand them before purchasing your dream house.